Hello and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at John L. Scott, and I am back to deliver your local real estate news for the week. I'll go ahead and jump on into these slides. Today is December 2nd, 2022. This is the third to last show of the year. I cannot believe we're almost done with 2022. We're past Thanksgiving. We're almost to New Year's, people. This is crazy. So there will be this show and then the next 2 weeks. And then the next 2 weeks, I won't be the weekly update. Sometime in that range, I will have my yearly recap and forecast episode. So that'll be coming sometime near the end of December. Date will be announced pretty soon. But I'll go ahead and hop into this. Oh, no, it is not a bye week. I forgot to change that from last week. Last time I did the update 2 weeks ago, we were headed into a bye week, but we did have the Raiders take away the win last weekend. Unfortunately, gosh, that was a close game. And then this coming Sunday, the 4th, they'll be playing the Rams at 1:05. So I got my colors on. I hope you do too. Happy Blue Friday. And let's find out what happened this week. Okay, so this week I think this is a really great, even though this is a story about my buyers, I think this is a really great lesson to be learned for sellers out there. There's a house that I had some clients that they were really interested in it, but there was some work being done by the sellers on the house. They said they would release the inspection report after the work was completed and send an updated seller's disclosure form, which states the seller answers a bunch of questions about the house and is very informative for the buyer. So we were waiting and waiting and waiting for this documentation to come through, and it came through, and we know prior to getting this inspection report that the sellers have taken care of a lot of these items. However, the items that were unsatisfactory on the inspection report were mostly deferred maintenance items, clogged gutters, just maintenance issues that if the house had been maintained over the years, wouldn't have been a problem. Like so many of these small maintenance tasks that if you take care of them as you go along as a homeowner, they're no big deal. But then you get an inspection report as a buyer that lists all these deferred maintenance items that haven't been done. And you know that they've gone through and corrected them all, but the question that this brings up, even if we know these items have been fixed, is what else? What else did they not pay attention to that the inspector didn't catch? Because the inspectors are trained professionals, but they are human and they do miss things that are wrong with a home. Some inspectors are trained more than others. Some have strengths in certain areas as opposed to others. So your inspection reports really can vary quite a bit depending on who's inspecting the home. These deferred maintenance items, it means we're backing away from the deal because my buyers were planning on doing a lot of work to the property. We got an estimate and everything. And then we saw all the deferred maintenance and we're like, okay, nope, there is going to be problems lurking beneath. So let that be a lesson to you homeowners to take care of your home as it goes along, so that when it comes to sell, it's not like a big disaster because it shouldn't be that big of a problem. So I'll go ahead and jump back on into these slides. This came out a couple days ago. Seattle tops nation's slowing housing markets. It was very recently that Seattle spent a very long stretch at at number 2 slot on the hottest markets in the country, second only to Phoenix, but those times have changed. Today, Seattle is among the fastest cooling markets, and Seattle prices declined about 3% from August to September, the biggest monthly dip in the country. tied with San Francisco. So if we compare today's prices to a year ago, they are up about 6% from what we saw last September, but this is Case and Schiller, so this comes out about 2 months lagging. So these are September's summary stats, but they're up 6% in September, with only San Francisco outpacing that at 2% growth. Year over year, if we look back a year, the year over year September home price stat was 23% increase. So that's pretty crazy, the 23% increase, but now we're only 6% increase. But I mean, for anybody that owns a home, that's still pretty good return over that time. The median price for King County was $903,000 in October. Basically, with the interest rates risen to where they are now, with a 20% down payment, it was about $4,000 a month for that median average price home. And if we compare our local stats to the national numbers that are going on, national home prices dipped 1% from August to September, and we're up nearly 11% over last year. This shows the map. Seattle was number 2 for home price increase year over year. And for Seattle, the home price decline, that was the greatest in the nation at 2.9% from August to September. But we also rose significantly more than most of the country in the past years. And that brings us to our local stat minute. So we had 305 new listings, 433 pending, and 434 sold in King County. So we did tick significantly down in new listings and pending listings, which we would expect to happen this time of year. Thanksgiving week, there's usually a huge dip. That's what we just went through. So we should see possibly a little bit more next week, but headed on to the decline after that. And if we bring it to our local area breakdowns, every area had fewer new listings than pending listings by a pretty significant amount. Kent and Renton had way fewer price reductions percentage-wise than Auburn and Federal Way. Auburn and Federal Way, the price reduced outweighed the new listings, and Kent and Renton, that was not the case. So as always, it is super important to look at your local market if you are buying or selling in that area. Bring it down to as local as you possibly can and know what's happening around you. If we look at our North America showings, we did down and up over the past week, which we would expect with the Thanksgiving holiday. You can see that repeated in prior years. These dips are from Thanksgiving, so that is what we're doing here. And as you can see, we will trail off until basically the new year and then take off into the new year with a little bit more action. Last time we were here, the rates were at 6.61%, down from 7.08 the week prior for the weekly average mortgage rate. Our 30-year fixed daily rate was 6.63 last time we were together. Today, we are down to 6.49 from 6.58 last week. So we're headed on that downward trend, and Wednesday, there was a bunch of good news and markets rallied. Looking forward, there was a lot of really great news that came out, and the markets reacted very strongly to that. And we had a drastic drop in interest rates. It did tick up a little bit today to 6.34, but overall, you can see this little drop off at the end here. That's what's going on right now. We had been holding a pattern for a while, and basically we have dropped. Our pattern has changed, and we have gone from the low 7s to the mid 6s in a very, very short period of time. The only thing that could happen at this point was Friday. Today, the labor data was released. The Fed primarily focuses on inflation, but labor is number 2 on the metrics that they're tracking as far as what they're doing with the Fed funds rate. basically, if jobs become weaker, we know the Fed will be curbing their increases going forward. But the news came out today that we actually had more jobs. So we did have the opposite happen with jobs than was expected by a great number of professionals. And the job market is strong. There's a lot of places that are hiring. And while there's a lot of layoffs in some industries, I know we've had a few big names have some pretty big layoffs. So that has been taking over the headlines a little bit, but there's a lot of other industries that are still hiring. So the job market is incredibly strong. There's a bunch of jobs out there in certain industries for people looking for work. And you can see the average jobs have increased. So this complicates what the Fed is doing going forward. It's looking like instead of the 0.75 increase that they have been doing, it's going to be closer to the 0.5. But with the job market as strong as it is, I don't think it'll drop down to their normal 0.25% increase. If we're looking at consumer price inflation versus wage growth, I mean, wage growth has certainly not kept up with inflation. This is showing that there's an abnormal spread. We have hit a very abnormal spread between the 10-year treasury and the 30-year mortgage. Basically, analysts are looking at the 30-year mortgage rate coming down pretty significantly, heading forward into the next few weeks, hopefully, maybe months. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the real estate market in your area or an area you're interested in. Remember, it's just super important to dial it down super local to the area that you have your real estate interest in, whether you're buying or selling. Look very closely at that specific area. If you're in South King County or North Pierce, please reach out to me. I am very well versed on the area. I would love to help you out. And if you're out of my area, I can connect you with some amazing people. Thank you so much for joining me. I will be back here next Friday for the next to last episode of the year. And I hope you have a fantastic week. Go Hawks on Sunday, and I'll see you next Friday. Have a great week.